I've just said, thank you for joining me and not being at the pub or shopping this evening. We all know that financial statements of limited companies is much more exciting than any of that. We love a bit of revision, so we're going to be here, of course, spending your evening with me. And also I am going to crack on because we've got two tasks to get through tonight. So we're going to try and get through task 1 and task 2, because as we know, they're both linked very closely together because they'll be based on the same information. These tasks are based on preparing single entity financial statements. So our statement of financial position, our statement of profit and loss, our statement of changes in equity, or we could be asked to do a statement of cash flow. Remember, don't forget about that one. We have done prior recordings. We're not doing the cash flow one tonight, but there are other task 1s and 2s that we've been going through. I think there was one in February. So if you're looking back on the past recordings and you want to do a cash flow one, look for that, because some task 1s and 2s sometimes come up with the cash flow, which I know a lot of people don't like, but actually I think they are easier. I think there's slightly less information to deal with and you have to flick between screens a lot less. But anyway, not everyone agrees with me on that outlook. But how did you feel about this task 1 and 2 question? Who has attempted it? Did anyone get it to balance? I am not expecting anyone to get it to balance. Yeah, a few okays. I think there's quite a lot of information to deal with. A few, oh, we've got someone who balanced. Oh, let's see if it's actually correct then. Because remember, you can still get it to balance and it still be wrong. So we're not worrying about all those. I don't even know if you'd get extra marks for making it balance. So just because you get it to balance, don't sit there for the last 15 minutes thinking, oh, I need to make this balance. No, we're going to spend our 1 minute per mark roughly. So we're going to spend roughly about 40 minutes on this because it's worth 40 marks. Once we've done with that, we're going to move on, because you could sit there for ages trying to figure out what you've done wrong. And you might have even just posted one of your numbers wrong from your workings into the main statement. So who knows? Sarah saying it took her a bit longer than she expected. So a few people said it's okay. Lots of information to take in. Yeah, definitely. Oh yeah, Charlotte. Yeah, the provision for warranty is a bit of a difficult step. So we'll definitely go through that. Don't worry. Yeah, that and corporation tax, that's fine. And this is why we're saying that we want to make them mistakes now and not understand them bits now, because we're learning from those. We don't want to suddenly do it perfect. Well, great if you have done it perfect, you're on the track for them prize winning points, but if we haven't, this is why we're going through. We're going to learn from them mistakes and learn from the bits that, oh, actually I wasn't quite sure where that went, so I know which bits now to go back in and revise. But perfect. If we can all make sure we're on mute. I've just got a bit of background noise. Sorry, unless you're waiting to ask a question, I just haven't stopped talking. Then feel free to talk up. I did email out the task to whoever was signed up to the participant list. I checked it this morning and sent it out again. I believe that's what we're going through. If not, I will be sending the notes round to the email list tomorrow morning from this session and the recording from the session, so you'll have it then. If not, yeah, definitely, well done, Neddy. Yeah, exactly, didn't make it balanced but exceeded in task 1 and 2. Brilliant. And remember, when we are doing task 1 and task 2, they do bulk together and in total they'll be worth 40 marks, but the split between task 1 and task 2 each time can be different. It just depends on what information they're giving you in the additional comments, so where that information is going to be dealt with. We'll see that a lot today, a lot of the adjustments actually hit the P&L and not as much in the statement of financial position. So how would I approach this task? So some people do it differently. Really do need to do question practice for these ones to figure out what works best for you, how you find it best working through the computer-based software as well. I like dealing with task 1 and 2 together as if they're one big question. because I think as I'm reading through the information, I don't want to forget what's happened. So when I get to my second task, which for here is creating our statement of financial position, I don't want to have to go and read all of the information again, because I think that's personally a bit of time that I've wasted there. So I would rather flip between the different tabs on the different tasks in the exam and do task 1 and 2 simultaneously together. But if that doesn't work for you, obviously that's fine, but give maybe a couple of different approaches to go on practice papers so that you know which way works best for you and how to flip between the tabs. So that's how I'm going to work through it today. And I also, some people prefer going straight in with the adjustments, whereas I try to like get everything from the TB into a working or into the pro forma, because I think you're in a great position in this exam because you're given some sample workings, you're given that pro forma. Yes, we have to fill in and pick the drop down boxes, but because we're given them workings, we automatically know where things can fit in, and we can automatically fit in our numbers into our workings. So I'm just going to start off. First, most important thing, what is our year end? So what are we being asked to do and what is our year end? So task 1, we've been asked to prepare the financial statements for Fox Limited for the year ended the 31st of May 2004. So a bit of a different year end there, so remember to take note of that. In the exam, little things like this can throw you. If you're used to always December year ends, it's surprising how under exam pressure you'll forget to check that piece of information. And we've also been given information, so we've got our trial balance here, which we know was all the information we're going to need, plus the notes. We're also really going to take note of what the figures have been denoted in. So here it's been rounded to the nearest thousand. So we're going to denote our answer in thousands. And we're just going to check then, yes, that is what they're asking us to do. When we've got to fill in our answer, we're still giving it to it in thousands. So we need to remember that when we get to the notes. We're being asked to do a statement of profit and loss and other comprehensive income for the year. We've got our workings here. Then we need to do our statement of changes in equity down here, which in this question, we don't have any amendments to share capital. We haven't got any new share issues. So the first 2 columns are really easy. It's only our retained earnings that we've got a few numbers to add in and adjust for there. And then our task 2, as we know, it's going to be a continuation of the scenario from task 1. So all the information we need is in task 1. And then what we need to do in this is draft our statement of financial position, like we've seen. And again, it's denoted in our thousands there. And we've got our workings for them sections down here as well. So let's go back up to our top of our TB. Sorry, you're going to get a bit dizzy tonight with me keep flicking between screens. But I want to try and give you a unique experience of how I would do it in the exam. So my property, plant and equipment at cost. Remember, all my numbers in my TB, they've already been accounted for in my double entry system, which is why they're now in my TB. So these numbers, I just need to go and put in one place. I need to put them on the statement of financial position or the statement of profit and loss, and that's done. I just need to get them in the statements. Whereas when I get to my adjustments, that's when I'll need to think about my double entry and both sides, what's happening then with the extra information. But now I just need to get them into where they need to be. So I've got my property, plant and equipment at cost. So I know that that's going to go to my statement of financial position and my PPE working. Also looking down, I'm also going to obviously need my accumulated depreciation figure. Remember, that's at the start of the year here. So we'll still need a charge for the year. But those numbers we can go straight and put in our PPE working, which is under our statement of financial position. Down here. Remember, we've got our pick list here. So we're picking the first one. So we're going to have our PPE at cost being our first entry. And we were told that that was 65,000 there. Then we had, I'm trying to find it in the pick sheet now. First one, our accumulated depreciation, which was at the start of the year, remember? And we were told that was 6,500. And we know that that is decreasing our PPE balance. So we're going to put that in as our negative there. So that's dealt with that. That's them figures in somewhere. Going back up to the top. Now we've got an allowance for doubtful debts at the 1st of June. So at the start of the year again. So £46,000. What do I know about this? This is going to net off against my trade receivables. Brilliant. Yes, thank you, Sarah. Against my trade receivables there. So I'm going to put that in my trade receivables working as a negative. So I'll put 46. I've got a trade and other receivables working. So everything's going to go in here. And I have got my starting allowance for doubtful debts. And we said that that was our 46 there, and that's going to net off against our trade receivables. So that's why it's a negative figure there. It's going to reduce how much we are owed by our receivables. Our next figure. Sorry, but I'm going to keep scrolling up because I know that some of you haven't actually got the question in front of you, so I don't want you to miss out. So next we've got our cash at bank. We've dealt with all the information above. Cash at bank, I don't have a working for that. That has a separate line on the statement of financial position always, so cash always has a separate line. So I'm going to put that straight in. Because remember, if I do end up having to do adjustments for it, I am on a computer, so I can just delete the figure and retype it in. It's not like in the olden days when you used to have to handwrite it and then scribble it out and make a big mess. We can always change it. So I've got 1311. I'm going to put that straight in my statement of financial position. I know that's a current asset. So I'm going to put my cash in hand, or let's see what they are calling it here. Cash and cash equivalents from the pick sheet. Oh, I can't spell. You know what I mean. There, and I said that was 1311. So I'm sticking that straight in there. So that's that dealt with. Perfect. So picking up marks already by putting these figures in, okay? So remember, you get so many marks for actually just putting in the information you're given at the start and dealing with simple adjustments. So don't worry if you did make them mistakes on the harder adjustments we're going to come to. We've now got a bank loan that's repayable in 2009, right? Do a little check. I'm in 2004. So that is going to be a non-current liability. Again, I can't remember seeing a working for specifically bank loan. The payables, only trade and other payables, that's a current liability, not a non-current liability. So I'm going to put this massive loan, £40,000, straight in my statement of financial position. Down here, my £40,000 there. Then we've got our share capital and share premium. I've had a quick scan of my adjustments that you'd normally do as you're reading through what you're being asked to do. I know that I've not got any changes to there from the adjustments, so they are going to go straight in. Be in my 2,000 and my 1,000 there. Louise, why should the loan amount not be entered as 40? Because here we are still in thousands and it is 40,000. So yes, that's a massive number, but it is. So it is 40,000 still being put in. Does that answer, or have I written it down wrong? We'll figure it out now. I go back down. So my share capital and my share premium. Now I remember that actually they are going to hit in two places, because they're going to be in my statement of changes in equity and in my statement of financial position. Remember, this is sort of a bit of a reconciliation, which then gets us to our statement of financial position numbers. So if there was any changes to them, I wouldn't put them straight in my financial position, but because I know there isn't, I can. So I've got my 2,000 and my 1,000 going in there, so my starting balance. And I know because there's no adjustments, they're also going to be the same in here. But if there were adjustments, I would leave the statement of financial position and do the statement of changes in equity first, because that's my little working basically there. So that's ticked those off. Now I've got a trade payables balance, and I've got a VAT balance, and I've got a corporation tax balance. All of these are credits here. So as you can see, we're now looking at these three figures here. Now, someone did say, got a bit confused between where these corporation tax and where the VAT balances are going. So we need to remember that corporation tax, yeah, the VAT through val, yeah. Corporation tax, that has its own accounting standard. This is how much tax the whole company needs to pay on behalf of the profits they've made that year. So our company owes HMRC, owes a tax man some money because we've made revenue in the year, they take some back off us. So this has its own accounting standard. And it's so important because the users of financial statements would want to know how much tax we're having to pay as a business. So it's so important, it's got its own accounting standard. It would be important to the users, so we make sure we report that individually on the statement of financial position. So that has its separate line in the statement of financial position there. But we also know that we're going to have a bit of a working here, because we've read ahead a bit in the notes, and we know that this actually £8,000 that's here isn't our current estimate for this year. This is actually related to an over provision from last year. But then we've got our VAT then. That isn't a special type of tax. That just goes in with our trade and other payables, because that is a VAT, it's a credit balance, so it's a VAT that is payable to HMRC, but it's not that important, and it's not anything that us as a company, it's not that important to us as a company. It's just something that everyone has to pay, right? We all have to pay VAT on items that we buy in. So it just depends on whether you're in that net debt or credit position when you're doing your VAT account. So remember, you charge VAT, output VAT on your sales that you make, but then you owe that to HMRC, but then you reclaim any input VAT on the purchases you've made. You'd have seen this right back at every stage when you deal with like purchases and sales. So that is just a normal tax. It doesn't have its own accounting standard. It doesn't have its own separate line. So HMRC for VAT purposes is just treated as another creditor to us, someone we owe money to, basically. So that we're just going to put in with our trade and other payables. Do we pay corporation tax each month? No, it's normally done on the tax year. So you'd normally just submit your tax workings year on year. And that's why you end up having this over or under provision from an estimate, because remember, accounting profits are different to taxable profits. So you make your estimate year on year at your accounting year end for how much you think the tax you'll have to pay on that accounting period. But then it's not until the tax year that it all gets sort of corrected, and you submit your tax return, tax people check it and everything. So if our VAT is a debit balance, treatment is deduction maybe. No, so if our VAT was actually a debit balance over here, it would mean that we are actually owed VAT back. So it'd be part of our trade and other receivables. So it'd be an other receivable if it was a debit balance. We wouldn't net it off against accounts payable, because we'd have a VAT control account. We'd get whatever the total was from that, whatever our balancing figure is when we total off that account. So then that account either goes to our debit or credit. So it'll either be other receivable or an other payable. And trade and other payables. So we know that these two are both going to go to our trade and other payables. So let's go and put them in now. We've got a working for that. So we've got our trade and other payables here. So we're going to pick our trade payables, which we had from the TB. And then we had our VAT from the TB as well. So there. Just so I get my numbers right, let me check my working so I'm not copying the numbers down wrong. So we had our 6225 and we had our 64. Sorry, just still admitting a few people there. Perhaps they have been down at the pub and they're now joining us. Then we had our tax amount, and I have read ahead and know that that is due to an over provision. So I know that that has got to go in my tax expense working. But if you didn't, you could maybe just make a note that you hadn't dealt with it yet. Or if you put it in the wrong place, like you said, we can change it. So we know that this is due to our corporation tax from the prior year. This balance was from our TB. And that was our minus £8,000 that we had in there. So we've dealt with those three figures now. We'll put them in our pro forma or our working. We've then got a trade receivables of 12,012. So let's go and put that in. I should have had it so it's on different pages. So we've got our trade receivables. That was both our balances from the TB there. And that was our 12,012 there. I'll talk a bit about that in a little bit about why that. So this is a minus because it was an over provision from prior year. But when we get to the note, I'll talk about it in a moment. And it's a credit in that working because we're looking at a tax expense. And we know that when we're dealing with the P&L statements, if it's a credit, excuse me, it's an income. So when it's an expense, that's why we're going to put it as a negative. I think that's where you were coming from there. Then we've got our retained earnings. Remember, that's at our start of the year. So our 5452. So I'm putting that in my workings here. There's also a workings right at the bottom of the statement of financial position, which you could put it in so you get working marks. I'm not going to do that because I'm going to scroll down, but because I'm going to use this as my mini working. But that's where you would put it as well if we were linking it to the statement of financial position. And now it looks like we've got quite a lot of our, these balances are now looking more like our P&L balances. So we've got our administrative costs, distribution costs. So if we've got a working from, I'm going to put them in the working. If they aren't, I'm going to put them straight in the P&L and then adjust them if I need to at the end. And remember my purchases, where does that go? What am I thinking about? When I've got this purchases and this inventory figure, brilliant, yeah. These are what I'm going to need to figure out my cost of sales, because remember, this is my opening inventory. And when I look down here, I get my closing inventory, which is the last thing I need for my cost of sales, remember. And note here, we've been given it in as the actual amount. Remember, we're dealing with rounding to the nearest thousand, so we're going to get rid of them. But we can put them figures in. So I'm going to put my administrative costs and my distribution costs, my purchase inventory and closing inventory in my workings now. So My admin expenses do have a working, but my distribution costs don't. So I'm going to straight away put my distribution costs in the pro forma. Remember, it's a negative because it's a cost, and it's 6654 from the TB. But then my admin, I did have a working for. So I'm going to put the admin costs of 18,800 straight into my working. Then I said my cost of sales. I said I was given my purchases, my opening inventory, and my closing inventory. They were both from my TB, and this was from the notes, but second note underneath. So I have my purchases of 76,425, opening inventory of 8890, and my closing inventory, which was 5776. You know that that's going to be needed for your cost of sales working, so get them figures in there. Then I've got my revenue. From reading ahead, I can't remember seeing any adjustments to revenue, so I'm just going to put that straight in there. My 128,500. That's probably getting me at least half a mark for just shoving that number in. I've not done anything there. Now I've got accruals of 11,000 as a credit here. So that is obviously going to go to my trade and other payables working. So I have got some more things for my statement of financial position. So I had an accruals balance from my TB, which was 11,000 there. So if you have questions as we're going along, I do keep forgetting to look up, but I will remember. I'll see it keep moving if you do post questions. Is there a way to remember where accruals and prepayments go? So remember, I don't know how you guys learn it, but I've always learned it and taught it being dead click. So to remember our debits and credits, so D being a debit, so and then E being expenses, A being assets, and D being drawings. So if you want to increase any of those, you do a debit. And if you've got a positive balance on that account, it's a debit. If not, click is credit. So credit for liabilities, income, or capital accounts. We know that a prepayment is a good thing for us. We've prepaid something, so that's really good for us. We haven't got to pay it in the future. We've already paid that money out of the bank, but we haven't used it up yet in the period. So obviously looking at our accruals concept, which is how we do our accounting, we need to then record that asset in our account because we've been putting and remove the expense because it didn't actually account for during the year. And we'll see that a bit in an example. Whereas accruals is a liability because it's something that we've used up or had in the year, but we haven't yet paid for it. So it's a liability. So that's why a prepayment is going to go to our trade and other receivables because it's a current asset, and our accruals is a current liability, always that case. Why have I put the distribution costs as a negative in the P&L? Because our distribution is a cost to us. So it's basically us paying out money. It's a debit here. And remember, debits are expenses for our P&L, which are negative. They're reducing our income down. They're a cost to the business there. So we've put that in. I think we've put that in. Now we've got a prepayment of 212. I've just said that that's going to go to our trade and other receivables. How do we know if it's an accrued income or accrued expense? That would normally come, so it'll here because it's an accruals balance and it's on the credit side. So that's going to be a liability. So that's our accrued balance there. So 212 is going in our accounts receivable, working, prepayments from the TB, positive balance because our asset there. Now we've got our dividend paid. Where am I going to pay that dividend from? What balance is that going to affect? Where am I going to put that? Brilliant, Nicola. Yes, Sarah, about retained earnings. That's going to impact my retained earnings. And obviously that's going to be a negative because I'm going to pay out of it. So I'm going to be reducing my retained earnings. So here, dividends minus 500 there. I'm also going to put it in my retained earnings working right at the bottom, but I'm not going to scroll down now because I'm going to use this as my workings, like I've said. And then finally, I had interest of 2 on there. That was a credit, I believe. I'm just going to check on my piece of paper so I don't scroll way up. A debit, so it's an expense. Our interest paid is our expense. So that's going to go to our finance cost here. Our interest paid from the TB was 2. I'm putting that here because I've been given a working for it, and I know from coming up from my notes, I'm going to have a note about that as well. There. So brilliant. That's my TB. Put all them balances in now. So now I can start working through the difficult bits, which are the notes that I've been given. Been told share capital consists of ordinary shares with £1 nominal value. That's just telling me that for what I've got, they're £1 shares. I haven't had any new issues in the year or anything, so dealt with that. Dealt with my closing inventory. However, I only put it in my cost of sales because I was looking at the cost of sales at the time. But remember, when I've got a note, I need to put it in a double entry because it means it's not been accounted for yet if it's in a note. Brilliant, Sarah, thank you. So I need to get it in my statement of financial position. So where is that going to go in my statement of financial position? I've credited my cost of sales to reduce my cost of sales, my closing inventory. And I'm going to debit my current assets, the inventory balance, because that is my closing inventory. If I've got closing inventory, that's an asset to me as a business. So I'm going to put that 5776 in here. Haven't seen a working for it. We always put inventory on a second line. So the 5776 is going there under my current assets. Now, that was a bit naughty of me. I should have dealt with it at the time when I looked at the note. But if not, you'd have picked it up when you remembered and went back through the notes. So now I have dealt with those 2 little notes. So let's go on to the next page. We're now being told that depreciation charge for the year is 10% on cost and should be put in cost of sales. Remember to note where they're putting things. They will tell you where the expenses or adjustment needs to be. So they're saying they haven't put it in yet because we know our accumulated depreciation balance was from the start of the year. So where are both sides? So I know I've got to put it in my cost of sales. So I'm going to debit my cost of sales to increase it, my depreciation expense. Brilliant, Sarah. My credit is going to go to my PPE working to put the depreciation in for the year. 10% on cost. I know that the cost of my property, plant and equipment from the top of my TB was £65,000. Times that by 10%, I get £6,500 depreciation. So that's going to go in my cost of sales working. So my depreciation for the year, which I've said is now going to be 6,500. So that's my debit. And my credit is going in my PPE working. So my depreciation charge for the year. And obviously that's going to reduce that carrying amount of the property, plant and equipment that I'm putting on my statement of financial position. So I'm taking that away from the cost balance there. Brilliant. I've dealt with that note. I've done my double entry for that. I've done 2 entries. Perfect. Change the colour for this. Next, we've been told the company paid rent of £60,000 for the 12-month period ending the 31st of December. What's happening here then? My year end is the 31st of May. X4. So what have I got here? Brilliant, a prepayment now. And someone's even told me how long for. 7 months. I would always count on my fingers. There's no embarrassment here. I'm rubbish at figuring out how many months it is. So I would count, I've paid for the year up until December. So I've started from January. So I've done January, February, March, April, May. That's how much is included. So I've only got 5 months in my year. Take that away from 12, I've got 7 months prepayment. People are telling me that's going to be my £35,000. Brilliant. So my prepayment is my 7/12 of my £60,000, which is £35,000. So what are my double entries for this then going to be? So I need to make a prepayment. So I need to debit my prepayments to show that I've got an asset, £35,000, but that means I also need to credit something. So what am I going to credit? Brilliant. Yeah, my cost of sales, because that's where it's been included. I've currently included that whole expense for a full year, but actually only 5 months relate to me. So I'm going to get rid of that expense because that doesn't relate to this year. So I'm removing that. So I'm putting that in my cost of sales working. So my prepayment adjustment, is that what it says here? Or it just says prepayment. So I just pick the prepayment one. I'm removing that from my cost of sales. So I need to deduct that amount there. So I'm taking that out. 7 months prepayment, which was £35,000 there. And then I'm flicking over to my next tab and I'm putting it in my trade and other receivables, my prepayment adjustment. Don't know if I've got a separate drop down for that, so I have prepayment again, and I'm increasing that by that £35,000 there. Brilliant. We've dealt with that adjustment now. We've dealt with that bullet point. Someone said, am I right to conclude? Yes, if you're using reducing balance method for depreciation, then you need to times the reducing balance rate by your carry amount brought forward each year to figure out your amount, and that's going to change. Whereas straight line, like you're saying, it's just the same amount each year, so it'd just be on cost, and it's that same depreciation charge. So it's 6,500 for this one every year because it's straight line. Whereas you're right, if it would have been reducing balance, we'd have needed that the carrying amount for the start of the year to then do our depreciation charge on using the rate. Next, we've been told the allowance for doubtful debts is to be increased by £14,000. I've already seen that I've had a doubtful debts balance in my TB, and I've already put that to my trade receivables working to deduct from my trade receivables to net it off. But here I'm now saying that actually for this year, I'm expecting to get less money back. So I need to increase my allowance. We would put that to our administrative expenses normally. So I need to debit my administrative expenses to show that this year I need to increase that provision, that allowance for doubtful accounts. That's an expense to me as a business because I'm going to get less. I'm expected to get less money back from my receivables. And then because of that, obviously my credit is going to go to my trade receivables account as an allowance for doubtful debt. So we'll see in a minute. Yes, it would normally be an admin expense, but in the question, it would normally tell you, so make sure you get it in the right place. So we've got that £14,000. That's going to increase here. So we've got our doubtful debts adjustment. Of 14. Have I made that number up? No, there you go, I have put it in right. And then remember our other entry is going to credit our trade and other receivables. Down here, our doubtful debts adjustment is going to reduce it by another 14. So these two numbers together is our allowance for the year, because we needed to increase that 46 by 14. So you could have just put them on one line and put minus 60 if you wanted to, but I like showing them separately. Remember not to get caught out. Sometimes the examiner will put extra lines in the workings that you don't need. Be confident in yourself that if you haven't used all the lines, you could still have got all the adjustments. He's putting that in on purpose to throw you off. But if you did run out of room and you need to put in another adjustment, you could always bulk them two together. Next, we've got our corporation tax balance. Remember, we said that's going to have a separate line, and on our statement of financial position, we've been told that the balance in the trial balance, like we've already touched on, is £8,000 in relation to an over provision in the previous year, because we've said we just estimate it. This year, our corporation tax liability has been estimated to be £68,000. So that means for this year, I think I've got to pay £68,000 of corporation tax. So that's going to go to my tax expense. So I'm going to debit my tax expense £68,000 because that's how much I think I've got paid for the year. And I haven't paid it yet, excuse me. So I've got to put that to my tax liability. So £68,000. And that, sorry, that £8,000 has come from my TB. So I only have to put it in once. So that's gone to my tax expense working, because remember, we adjust for anything that's gone wrong last year in our tax expense working, which goes to our P&L. Our liability, we've been told, for this year is just our £68,000. So here, I've got my tax expense. So this is now my corporation tax for the current year. Of £68,000, which obviously then is going to net to £60,000. But if you use the workings in the exam, it's going to add up for you and give you the answer, which is very handy. I've already said my taxation has a separate line in the accounts. Whereabouts is that going to appear? What heading is that coming under my tax? My current liability is brilliant. Taxation there, and we said 68,000 or just 68. Now I'm getting confused. 68. It was 68,000, but without the see it's easy to get mixed up. So that is now my tax balance dealt with. So it's then been identified that some goods, this is by far the trickiest adjustment here to deal with. I know a few of you said that at the start, so I might actually change my pen to red to show it's really hard. So it's been identified that some goods previously sold were faulty. It's expected that customers will make a claim under the warranty for the repairs of these goods. 500 units have been sold, of which is expected that half will require repairs under the warranty. So I'm thinking in my head now, right, I'm going to have to make a provision for this, a warranty provision, because I've said I'd repair the items if they're faulty. I'm expecting half of them to be faulty. So I've now got 250 units I'm expecting to need some repairs, because half of them 500 units I've sold, I'm expected to need repairs. Then, of the faulty units, half of them then are expected to cost £200 to repair. So right, so I'm halving it again. So now I've got 125 units. I'm expecting that to cost me £200 to repair. The other half are going to cost me £400 to repair. So the other 125 units are going to cost me £400 to repair. When I do the maths, and I do 125 times by £200 plus my 125 units times by my £400 to get my expected total cost for the repairs. What did we get for that? Brilliant. Hannah, Sarah, well done. MC, £75,000 there. So what double entry am I going to do for this then? I've just said I need to make a provision. So I'm going to credit my provision. I don't have a separate line for provision in here. So that's going to go to my trade and other payables working. And then my debit, I need to recognise that expense. I need to be prudent. I'm making a provision. I need to recognise the expense that I'm expecting. And we've been told here that repairs are included in admin costs. So I need to do my debit to my admin costs. Great, Priscilla, thank you. So that's what I'm going to do my double entry. So my admin costs here. What have I got from the pick list here? I've got provision for repairs at £75,000. And then I'm going to make my provision in my trade and other payables. I've got a provision for repairs. £75,000. Any questions on that one? That was a bit fiddly because you had to read that whole little paragraph, and it also didn't always give you numbers, it gave you wordy bits. So next we had interest on the bank loan for the last 6 months has not been provided yet. This has been calculated at £2,000. They've calculated it for us, but we haven't accounted for it. So they hadn't accrued for it. So we need to account for this interest paid. So what's my double entry going to be for this one? Oh yeah, sorry, that's how we got the £75. So we've done 125 units times by the 200 expected costs for those half, and then the 125 units times by the 400. Brilliant, Sarah. We need to accrue for these. So we're going to debit our finance cost to show that we should have paid. That interest is due, but we haven't paid it yet, so we need to accrue for it. So accruals. But in this case, we're putting them in trade and other payables. We haven't got a separate line. Our accruals comes under our other payables balance. So that's our £2,000. I'm going to go in here. So this is going to be our interest expense accrued for another £2,000. We've got a total of 4 there. And then we're putting it in our trade and other payables here. Trying to see if there's a different note, so it'll just be our accrual there. I'm going to put for our finance cost, just so we know when we're looking back at it. So we're going to increase that by £2,000 there as well. All operations are continuing operations, so we don't have to do any split. Brilliant. Oh, was there an interest one, Hannah? I didn't see that. So yes, you would have picked the interest one from the pick list for that option. So I've dealt with them all. Brilliant. So I can now just go back to my workings and I need to put all the numbers in. So my cost of sales figure, I need to total up from here. If you're using the software, it totals it up for you. So you'd have already had that figure, and we just need to remember to type them in right. So we've got our 86. Oh no, I'm writing it wrong. £86,004 in there. So then that would automatically generate our gross profit figure, which is our 42,496. We had our distribution, our admin costs, we had a little working down here for, which came to 18889. There, which gave us a profit from operations of 16,953. Finance costs from our workings gave us a total of 4 here. Taking it away again, remember it's costs. Taxation 60 there. taking away our 60. So we got a profit before tax, sorry, of 16,889, which, where is that number going to have to go? Because I'm also doing a statement of financial position and a statement of changes in equity. So where is this number going to go? My SOCI, under my retained earnings section. Brilliant. That gave me a profit for the period from continuing operations, because remember that last note told us that. Oh, I've put the total in wrong here, sorry. Got ahead of myself. That total, profit before tax, is 16,949. Then our profit up for the continuing operations after tax is 16,889, which is going to our SOCI under retained earnings. Getting ahead of myself, sorry. Other comprehensive income for the year. No, we didn't have any adjustments to deal with that. We didn't have any revaluations or anything, so that was just 0. So we had 16,889. Remember, if we did have a balance there, that would then go to our other reserves in our statement of changes in equity. Any other comprehensive income doesn't go to retained earnings. Remember, that's non-distributable. So then we had our statement of changes in equity that we are now up to. We put in our brought forward balances. We put that we paid a dividend of £500. We just needed our total comprehensive income. It was all profit from operations, continuing operations. So the whole balance of 16,889, our profit. So increasing our retained earnings is going there. And then totals would automatically be reported for us. There, so we're just toting along and across. But if you're using the exam software, so it's good to practice with the exam software if you can. We're saving time because that'll be doing all them sums for us. So that's that section. We've been working them together. So now we're coming down to our statement of financial position, and we've already got all our numbers in there. We've just got to put them back in the pro forma from our workings. So our non-current assets, we've got our working there, total them off to 52,000 there, put them in our non-current assets. Remember, we're going to use them for more than 1 year, so we've got our 52,000. Oh, also note, I forgot to say, this should be thousands. If you put all the zeros, don't mark yourself down, because obviously you've then actually followed what they've asked for. But I assumed that they'd made a mistake and these should have been in thousands. Obviously, in the real exam, they wouldn't have made a mistake. So remember to note what they are. But here, this was a bit of a mistake. Should have been in thousands. That's why I've done it in thousands there. Got my cash and equivalents, got my inventory. The other one I've now got from my totals is trade and other receivables, which when I sum that working up, I get 12,199, which gives me a total assets balance of 71,286. Did anyone get that? And this is obviously our halo number that obviously we're trying to balance to. So brilliant. If you got it to balance and you got that number, perfect. You got it right. We put in our share capital, our share premium earlier. What's our last bit of our equity section going to go in here? What are we missing? Exactly, our retained earnings, which we're going to get from our statement of changes in equity or a working that we've done below. Because remember, we're picking up marks for our workings if we do go wrong in the total section. So I would copy all my figures over from the statement of changes in equity into the retained earnings working at the bottom, just so we've got them there, just in case we make one silly mistake. We've already put in our bank loan, put in our taxation liability, because remember that's how much we owe, we need to pay that. Our other balance is our trade and other payables, which we had a working for. So when we summed up that working, here, our trade and other payables balance came to 6,377. So I'll put that in there. That gives our total liabilities being 46,445. Oh, neaten that up. Or you'll never know what I'm talking about when I send you these. 46,445. So then our total equity and our liabilities came to our 71,286. And like Kerry says, that is our woohoo moment. We've done it. And ours does balance. But please don't be ashamed if yours didn't balance in this example, or if it doesn't balance in the exam. Because more chances than not, under exam pressure, you're going to slightly miss something. You're going to copy an answer down wrong from your workings to the real thing. You're missing out on like half a mark. Do not get yourself worked up about balancing it. Spend your allotted time on it, 40 minutes on it, get through it. Once you're done, move on. Do not sit there trying to figure out what mistake you might have made if you haven't quite made it balanced, because you're likely not to find it. Or you're likely to mess up other things while you're trying to find it. I make it sound so easy. Well, that is my job, but hopefully that helped by the process that I would go through doing it. And you would obviously be a lot quicker because you've got the drop down boxes to pick from, so you don't have to write everything out. Your workings will sum up for themselves. Carmen's asking, sorry, how was the tax 68? Because we thought the workings was 60. So the tax expense for the P&L was 60 because we had to deal with adjusting for our over provision from last year, that £8,000. But when we're looking at what was the liability for this year, when we're adjusting for that, we're only putting our current estimate for this current year in our liabilities. So that was our 68,000. Now I'm getting confused. Our £68,000 there. Because we adjust for the over and under provision within the tax expense account. So we'd have got rid of that. And then our tax expense estimate for the current year is our liability of 68. There. What else have I missed in here? If the profit, right, let's do that bit again. So if I don't want to write on here and make it too confusing, so remind me to rub it out afterwards. If we had another balance in here, for example, there was a revaluation and we had another £20,000 that went here, that would then go to our other reserves, not our retained earnings. So we'd have had another column in our statement of changes of equity here called other reserves, and that would have increased that. So it would have been on the same line here, but a separate column. Would have had a 20 there. So remember, it's only our profit. I'm going to get rid of that so that when I save it, it doesn't confuse things, but hopefully that helps. It's only this number here, which goes to our increases our retained earnings, or if it's a loss, it reduces it. This number would have gone to other reserves if there was one. But luckily in here, there wasn't. Brittany, I think it would have to always say in the question where to put it to, just to get it right. But yeah, because obviously you can do the workings and you want follow-through marks, so they would have to say where they're going to put things, unless it was obvious and they were making an adjustment to an administrative contract. Then obviously you'd naturally know to put that in admin. And obviously interest always goes to finance costs, because that's the cost of us financing the business through a loan. But if not, everything else, or distribution costs, if they're talking about delivery costs, that's another way of saying distribution costs. But anything else like depreciation and things, it purely depends on the company's policy where they put it. So that's why they'd have to tell us where it goes. Why does rent go into the trade and other receivables? That was because we were making a prepayment for the rent. We'd prepaid some rent. So we had a rent prepayment, which was an other receivable. We put that on a separate line instead of putting it in with the payables, would you have lost a mark for this? You would have done, because naturally your totals wouldn't have gone. If you'd have put it in your workings, that would have been fine. But when you actually get to your statement of financial position, you'll only have so many lines, I think. So you would have then had to have missed something else out. So you then wouldn't have had like your cash and your current assets instead. If we're looking for a reduction in allowance for doubtful debts, you would reduce the amount that netted off against the trade receivables. So we'd have added a balance on. And you would have reduced your admin expenses. So if there's a decrease in the provision, this would have been a negative number there. You're very welcome, everyone. Thanks very much if you do have to go off. But yeah, that was, hopefully, I think I've covered everything, totaled it all off, we balanced it. Hopefully that's very helpful. I haven't yet looked at what we're doing for next week, but I will let you know on the email when I email out these notes and the recording. But thanks very much, everyone. I hope I've answered most of your questions. And thanks for joining me this Monday night. Have a lovely week and good luck if anyone does have their exams. Yeah,